All right. Good afternoon, everyone. Scott Henderson, shooter. And hey, we are at Swing Trade Notes, going to go over some charts and see if we can figure out what the heck's going on. Of course, at the end of our presentation, please do review our disclosure. All right. So let's take a look at the SPY. The more we're awful noisy here. And what I mean by noisy is that nothing's sticking. The bulls aren't sticking and the bears aren't sticking. So the more that we sit up here, and I'm looking at this as like peaking drive one here. So this is kind of peaking drive two. And then maybe we get a peaking drive three, maybe is a shallower head and shoulders here. And whether or not that breaks down below that 648, only time will tell us. But right now, that lower high, right around 648, 649, is my thought of where our line in the sand is at this point on whether or not we're going to move up into the rest of this impulse wave. Now, if I measure this wave sort of a rolling, meandering wave, as I see it, happens to land right at the 618. Now, there's a huge psychological level right here around 700. So I think when we get to the 700, which we're close, and which is roughly right around here, then either we're going to launch, which is what has been the MO of the markets here for, I don't know, since October of 22, where when we get these breakouts, we just have everybody jump on board and push it to the new highs. So that's sort of my mindset. And I'll double check. Everybody sees my screen, right? Beautiful. Thanks, Don. All right. Now looking at the NASDAQ, definitely a different look than the S&P at this. So the fangs are, you realize this rally, all-time highs in the S&P 500. And who is not leading? The Magnificent Seven. Now we have some names that obviously have been still in play, but other names like Netflix have just been brutalized. Now, note this corrective structure that I'm seeing here with Lux Algo's Elliott Wave Absolute as far as a tool. If that was our high, all three of these corrective legs are viable. It's pretty challenging, especially to hold up here. So again, I'm going to look at my line in the sand. You're going to hear me say a lot this year. When am I right and when am I wrong? Well, the bull market ends once we break below 581, but it doesn't mean it doesn't restart when we get down to our next shelf, 523, or down to our next shelf, roughly around 482. And we're sort of at the will of Mr. Market, what it decides it wants to do. So, but still, both the S&P 500 and the NASDAQ have this head and shoulders look, which is why it's on my chart. And this is very much how they behave. So there's nothing out of the ordinary. Now, today I'm just going to flip through some of the sector ETFs because I just want you to get a visual of, we're at a crossroads here. XLF, I think we give it back. Citi had some rough earnings related to Russia. So we'll see how the rest of the banks. Looking at SOXO, it's now coming back. I mean, we have a huge impulse leg here. I measure, being conservative, the 1618 is a little higher up at 110. So based on the trajectory of this wave, and assuming this is our peaking drive one, peaking drive two, peaking drive three, I'm looking at this as wave two has completed. However, like anytime we're looking at a tape, that we could be migrating to a larger wave. This could be peaking drive one. We could get a peaking drive two here and a peaking drive three up here. And this thing really could launch. I mean, much more aggressively to the upside as far as the slope that I have here. However, historically, the tape puts in a very similar slope. It's very methodical. So I don't think that changes. All right, let's look at XLE. Now, we came back on the Iranian news. I had posted some stuff on Twitter with Dale Penkert because he was my mentor and coach and still is actually. And, he was a floor trader as far as oil futures. So when he talks about oil, I listen. And, I posted a chart there and I said, yeah, I agree with you. I honestly think we have some significant upside. Well, it's kind of played out. So I'm thinking that XLE gets a bid again. So, again, that rotation comes into energy a little bit and we push back up towards 55. Now, XLC, right now we're just seeing communication is steady Eddie grind uptrend. And, I think at this point we have a shot probably at 50% back at 157. On the shallow side, it'll be at 139. All right, looking at XLV Healthcare. Now, this is looking a little overdone. We're sort of rejecting on these wicks here. Hasn't rolled over yet, though. Still in a clean up trend, but we're at a crossroads, just like we were looking at in XLF. So that's sort of a mixed bag. Now, looking at SMH, clearly we're getting overdone here as far as the levels. So, looking at where we potentially could project out as far as price, I'm thinking that there's a very good chance we just continue. We need a good back test. So I think if we come back and test the base of this candle around 325, then we have a launching pad. Be very candid, I'd prefer that. But let's look at XLY. Again, another crossroads look, like right in the middle. Again, with XLI, another crossroad look, except for a little bit more on the bearish side. XLB, another kind of crossroad. Looks more like a leading diagonal to me, which means we'll thin out up here. And that mixes with the euphoria in the tape. That's a pretty aggressive move for materials. Silver is really benefiting from that ban out of China. So I don't think commodities slow down at all here. I would like it to pull back so I get more entry or better entries, because I don't have the exposure in metals I really would want here. XLU sort of, so we have no flight to safety here in this look. None. Looks to me like it's going to be an ABC and then break back down. So that is supportive of being bullish equities, sort of the look. Maybe we get something like this. Looking at IBIT, crypto actually has come back just a little bit. I think we do head back towards the highs. I don't know whether it happens second, third, or fourth quarter. I don't think it happens first quarter, but it could if the Fed actually announces that we're going to do this buy kind of thing. So XLP, consumer staples, just is a freaking launching pad. Look at that. That's just launch. So I think that 618 is totally viable at $86. It's not even a chase here. We pulled back to the shelf. Maybe we get interested at $80. Now, just a quick peek at copper. The old story is what Dr. Copper does is what the market does. And right now we are in a solid uptrend. Just solid. Until we break this, I'm going to go back here and just sort of draw this line. How that was our first leg. Then we stepped up and went right into the next band. And now we've entered a third band up here. So if it accelerates, it'll steepen up here a little bit more, and so, we could definitely see significant upside. Let me switch over to our charts. All right, let's just review some names here. And forgive me, I drew this up. I'm coaching or I'm mentoring Sentinel on different chart structures, and ONDS was one that I happened to work up as a teaching tool. But there is a shot we pulled back here a little bit, which is one reason I sold the cash secured puts, because I wanted some exposure after trimming. But I do think we come back and test the shelf. That would be the most logical, even with it, because we got our first push lower here. Then we did that sort of exhaustion push. So we should pull back at least to the base of the shelf. This shelf holds, then we got a serious launching pad back to the upside. And from what I can see, that 16, I think it was 1645 or 48 is what that large buyer had. The main thing is they also acquired the $28 warrants in some large, but they got a discount on those. So, I can't really see it, how much that's weighing on price, but supposedly there's a lot of contracts coming from Washington on drones, and I don't know how that's going to benefit that pricing. So at this point, my mindset is I want exposure. I'm good with what I have. I want to add back around 11 or 12 bucks once we get back down. All right, look at OKLO. So I would suspect we get about a 50% back test here, just from the look. I don't think it's done though. Back to the upside. But, looking at that number, 50% back, which, is roughly back to about $93. So we're just about there. Could flush all of the 78.6 at 81 and done nothing wrong. Now, AMCS is just sort of stuck here, not reacting at all like some of the secondary semis are. All right, looking at Cisco, I still like this as an infrastructure play, simply because there's certain things that they do in connecting data that just nobody else has that much exposure to, that much experience. So it's a trusted name. We're also holding trend support. So that's sort of my thought on that. ELF actually did start getting going. I think we get into the gap. We're right, quite a little bit away, still up around 94. But, I think we fill the gap or close to it. And, when we get a gap fill, it's usually at least 50%. So the first point of rejection would be about 105. I'm okay with that, as far as the look. All right, looking at SMNR, kind of rejecting just a little bit. but it's still done nothing wrong. Leg one, we should put in, unless we take out this low. I'm just going to sort of give you a visual of wrong tool. Hold on a second. That's the fun part about having so many tools. You got to remember to click the right one, huh? All right, so maybe we get something like this back up to that shelf, which is very viable. So we could pull back as long as it doesn't take out this body of the candle at 1632. I'm pretty good. As far as price, I don't plan on touching that because that is something that I think will benefit from this gaping hole that we have in the power structure. And I'm not recalling the name of the company here in Texas, but somebody's building a large data center and it's going to have a nuke here. And they just had a major argument with our governor here because I guess Nevada is not accepting spent uranium, as far as fuel from the reactors, and they're not going to allow final permitting until they figure out where they're going to dispose of the spent fuel. And I don't know that there's a lot of options for that, but that's what I'm talking about, bottleneck, because all of a sudden things will just stop. Then it's going to require like an executive order or something like that to overcome it, like require Nevada to start taking spent fuel again. Just the swipe of a pen can fix that problem. So, SMR is one of those names that I have an interest in. All right, EOS, just a beautiful thing. Nice. We should start pulling back. I'm looking at this as, potentially our 1. We're putting our 3. We're getting the back test now. So we should put in our 5. So we should head towards about 21. UPS, again, generals are going to recover. D's also recover. DE are John Deere is also recovering too. And, I think that we're not in any shape. If you look at the jobs numbers and you look at CPI, we're good. So outside of the fact that consumers got a little shaky going into November and December, I think they got shaky because everybody was thinking about, well, everything is going to be so expensive for the holidays. I'm going to pull back a little bit. But we're starting to see that resurgence. So, but I do think there's a shot to pull back. It takes out this shelf right here at 105. I'll take it off and then plan on buying it back on this particular ledge. I'm not really up that much. I think I'm up about 3 points on it. All right. BMY, just another staple we thought would recover. Been in this thing for quite a while. I think we head back up to at least 59. This upper shelf is the first point of rejection around 60. Rocket Labs has done nothing wrong. The trend is your friend until the end. Confirming trend support, EMAs, whatever you want to use. It's getting pretty tight here on this. If you're using a confirming trend support, it'll take it out here probably on this pretty quick. I don't know that I'm going to trim there. And, where I look at this, it's a ending diagonal because 4 is definitely broader than 2. However, that's a very euphoric move. Equality probably puts us closer to the 100 fib. So that is what I'm thinking where we're going to go. So that's my mindset. FCX, just perfect beast. Perfect beast. Now we're hitting into a little resistance, so obviously don't be afraid to take profits along the way here. But it's done nothing wrong, pulls back to 54 bucks here. However, I don't see it right now with copper doing what it's doing, what the other metals are doing. We need a huge amount of new material that we don't have stockpiled, and Freeport is one of the benefactors of that. All right, Morningstar, sort of stuck here. Still done nothing wrong. We're green, but not that much. Sort of the same thought about ASMC. It's done nothing wrong. We're waiting for it to get back into the uptrend. Really doesn't confirm the trend change until where are we going to pull back above? Really, probably way the heck up here, actually. So we got to get back up to about 238 before it's going to confirm, a trend change back to the bull side. Again, just sitting on it. John Deere is now working after I trimmed. That's the story of it's just the story of the game here, isn't it? However, good chance we reject up here. So we get into this band, this topper band around 526. I'm probably going to trim and then wait for a pullback. And then I might give a shot at some calls there because I do see all of our generals to some degree recovering. All right, BABA is working right off of that base there, and I'm really way too small position size on this, considering my level of conviction when I was looking at this after this drawdown. Once we took out that 156, it was just straight off to the races. 1618 at 174 is next. It probably pushes to the 180, 78.6 around 182. Then we get a little bit of a pullback, but it's still off to the races. Looking at Intel, done nothing wrong. Perfect thing. Now, I trimmed it going into some of the select earnings this week because I wanted to wait and see what the banks did because I didn't want any more exposure than I really felt comfortable with because we have not started the way we did last year. Clearly, we're sort of like running into resistance in a lot of names. So this was one I trimmed. I do want to get back into it, though. I get a pullback to 43, then I'll probably put some calls back on it, or I'll do a bull call spread, something like that to try and keep some risk limited, but still catch the upside. Now, Intrepid Potash, another one, just like perfect, just it's running. Now we should get a good back test here. However, note RSI down. This thing is really confirmed. So the gap, when I look at this, I look at the distance between RSI here. So, we roughly have, coming over here, 3 weeks between the peaks. So if this is peak 1, come out 3 weeks. So we should put in peak 2 up here around 34, I would think. Then maybe we get another peak around 35. So this is likely going to extend up here to this fib is sort of my thought, just looking at digging down into that count. NTR. Geez, another one just kept going. If you trim the weakness and you hold your strength, sooner or later, it's going to work. So the beautiful gap here. Now I'm looking at this as general 1, so I think we get a general 2 and a general 3. I'm going to come out a little bit further in time on this one because I want you to get a visual of, we've taken out my breakout trend that I was looking at, which really I just was looking at this level from here. Boom. Once it took that out, now I'm looking for 81 bucks on this. All right. Looking at Mosaic, just starting to run here. Beautiful look right now. We've taken out our first lower high. Next lower high comes in around 31 bucks. Then we should test 36. Could see a little rejection around 34. So we'll have to decide whether we're going to hold it after that. All right. Let's get to some requested names. Now, Rendo, I pulled up both the 3750 to give a visual on this. I think this is a 5-wave down, an ending diagonal, which puts us back down to this shelf around 423. Similar look. I got to get to US dollars. Why it was up there? A very similar look. So I think there's a good chance that we get down to this gap or test this gap right here. All right, let's look at AEHR. Slow grind, steady to the upside. We've taken out that lower high. All right, so we've put in our drive 1 here. We're looking at an impulse. And realize I'm looking at all time frames when I look at a chart typically, unless I've been in it recently. And then I might not, really depends because just yesterday, I bet you I looked at 700 charts. All right, so looking at AEHR, I think our 3 is pretty much a given at 29. Then we get a decent back test. I like, a shot back at 26 to try and take that for a breakout, take out the highs. Now on FATI, I'm going to go out to the weekly just because I want to give the full visual here. We're getting pretty extended here. And the main reason is that we need to take this out decisively, simply because of the look. This is what I would say is a leading diagonal. So instead of becoming a broadening formation, they typically become a wedge. So, you get something like this, except for the wedge extends pretty deep here. So you look at it this way. And then we're going to get a rejection is sort of the look there. So I think that we chop around here, get one more final push, and then it breaks back down. So I think we're good for the moment. OPXR. Now I'm going to look at this one on the weekly only because it was such a flattening kind of look here. I think we pull back, test these lower fibs around $8. So I don't think the shelf holds structurally. And the main reason is we're testing this, so this breakout right here. And notice it's below this breakout right here at 1288. That 1288 really needs to hold. And we're kind of rejecting price. So I think it needs a little bit more of a flush lower, and then it'll probably bounce. That'd probably be a good spot to add heading towards that 3. IIPR, I got to come down to the daily on this one because that's how I drafted it up. All right, so buyers should have shown up here. That's a tell in itself. And notice that we're constantly rejecting this price around 58.60. That's got to get cleared. No bull trend until that gets cleared. And then technically, it really needs to take out the 76 bucks for the trend to change, and that we're working on the gaps. So there's some better looking names out there, but I do think it does recover at some point. I would really get interested around 25 bucks. All right, looking at MP Materials, nice recovery. My problem is I think it rejects. And even though, let me come out to the monthly because I want you to get a visual of how big this upside is, how it measures. Problem for me is this doesn't look done. This piece right here doesn't. So let's go back to the weekly. So the way that I'm looking at this is we could have an ABC structure here, pretty much a given on a corrective leg, which we're in. So, and we really don't have a C. I mean, that could be classified. That little push off, it could be. I mean, it could be that this was our A, this was our B, and then we got a shallow C. That's viable. It actually lines up a little bit there with the imbalances as far as the structure right here. Comes back and tests that shelf, but didn't tag it. I'd rather have tagged it. MACD is supportive of a move back to the upside. Looks like it's getting ready to cross. So, I mean, it's a viable shot here with what's going on with materials. I mean, it is a viable shot here. I'm not going to say it's not. I'd rather get a pullback to maybe 58, 59 bucks and then take a shot there. But you might not get the opportunity here with the way. All right, looking at WeRod, sort of in that stuck flat. If it does come out of this here, it's going to reject again. I mean, so I don't think we're going to get back above that 17 bucks. Now, this fib measures this leg. So this trough here, this peak here, trough here. This fib measures this trough, this peak, and this trough. Because just like how Elliott wave stair steps, so do fibs. So when I have multiple fibs on a chart, I'm looking at it, okay, what's my short-term play? 50% back, so 61.8 is a viable target. Then we probably reject. If we can't get above and clear above these highs, then we're going to come back and test the low. So that's sort of my thought there. All right. Colgate actually looks very constructive. I like it. I do. Back to at least 382 fib at 90 bucks from where we are. It's going to take out. It confirms the trend change right overhead, a break above this 87 bucks roughly. So it will confirm that back to the upside. All right, PARR, actually very constructive. One thing I don't like is that we didn't get back to our main secondary, where we rejected here. This is your best imbalance. I'm not going to be perfect here just for time here, but we tested this first imbalance, so it's the second imbalance zone. So we have a real shallow imbalance zone. But notice where I'm coming back over here to the sell side, where this lines up, right in that same band. So you have some confluence right here. It's a good spot to bounce. This could be a very euphoric move to the upside. Now, my challenge is that the volume seems thick here. It's not squeezing. So when a move is going to continue with volume, quite often what you have is you have your peak at the beginning of the move, then you get a shallower volume, a shallower volume, shallower volume. This is expanding. So somebody's adding to this, somebody has inside information about something, right? And they're buying because of that reason. Or structurally, there's something I'm not seeing in the macro and micro as far as the name's concerned. But it could get really euphoric. And we could see a move pretty quick from 38 bucks up to 50, 55 bucks. So I actually like the look here. It's a good, decent risk reward. You sort of have mound one forming right here. So this is going to be peaking drive 1, peaking drive 2, and peaking drive 3 should come in. Let me just draw a line to give you a visual. And I'm always looking for equality, so I want the next peaking drive to be similar in distance and time from the prior one. So if we maintain that slope, which I don't think we do, by the way, I think it shortens because it's sort of rolling. Plus, we look like we have an ending diagonal, which means that this is likely going to become a broadening formation, something like this. So that's very viable. The top end of there, so at 55 bucks looks good to me. All right, looking at Intuitive Machines, I think it's good to about 78.6, about 24 bucks. Then I think it rejects just the whole structure here. And then let's peek at NEE. I think we're ready here. I think it gets out. Doesn't confirm the move back to the upside till we break out of this spot right here, roughly at about $39. And that will confirm trend change back to the up. So, that's basically what I have for today, folks. Man, I got that down to 40 minutes today. Anybody have anything else that they want me to look at? And actually, Greg, your comment about the chart. I mean, do you prefer to see the weekly versus the daily? I mean, and anybody's input there is, all right, let's look at TSSI. Beautiful look. Good spot. Hold on, I grabbed the wrong tool. Just ballpark 1618 is way the heck up there. Actually, a lot of upside here. Keep grabbing the ABC. So roughly a look, maybe something like this. So 78.6 is viable on leg one. We get a corrective ABC. No problem, Greg. And also it depends if I'm moody. What charts I want to look at, because I literally get tired of looking at charts. So yeah, I think in the if you do a search under EDU, look at strategies. I believe I have Elliott Wave Absolute in there. I'll go back and check and make sure I have the link there for you. So if you want to download it, but we should get a corrective like something like that, once we get up there, and then put in another impulse from there. CNP center point. Where the heck my RSI just went? Okay, so like when I look at a chart, now I'm coming out. I'm out on a monthly. Reason I'm trying to see where I'm visually trying to see where my mound structure is working from a foundational point. So when I first, especially on a larger time frame, so I'm looking at our initial target of mound 2 up around 56 bucks. So this is peaking drive 1. This is peaking drive 2. We'll get a corrective leg probably back to 32 bucks, and then we'll be heading back towards 52 bucks from there. I wouldn't enter here now, just structurally for that reason, just how I expressed it there. Now, Lux Algo, it has its quirks. In my opinion, it measures too shallow in time, because it basically is measuring, at least the way the script is written, it's measuring zigzag. So when it gets a shallow leg here, it's not measuring this as a 1 or this as a 2. It's measuring it as, hey, within the last 10 candles, it hasn't done this. Or within the last 10 candles, it's done this. It's not seeing this as wave 1, okay? It's not seeing this as wave 2 with an ABC structure. So it's not seeing wave 3. So clearly, this is an impulse wave. Peaking drive 1, peaking drive 2, peaking drive 3. Confirmed. Absolutely no question. The question is how euphoric it is going to be from that point. So just coming here and throwing some fibs up here, which ultimately just measures the extension for us. So assuming this was mound 1, we're going to get a mound 2, right? That could measure up to the 618. Then we're going to get a back test probably to about the 100 fib. And then either we're going to fully extend to the 2618, right? Or it becomes a flattening top. We get just a little higher high and reject, or it goes in the middle. The way I look at Elliott Wave, there's always 3 outcomes, no matter what pattern I'm looking at. And there may be a combination of patterns that get us there, whether it be an impulse wave or an ABC structure or flat or whatever. It doesn't really matter what the pattern is, but ultimately, if you measure it, what I've learned is the distance between the beginning of wave 1 and the end of wave 1 is typically 75% of the distance of wave 3. So we can basically add 25% to this, and that'll give us our distance of where wave 3 should land. Within a standard deviation or 2, of course. And by all means, if you want to throw Bollinger Bands up there with standard deviations, that's second standard deviation, third standard deviation. It really gives you a visual once you understand the wave structure, not suggesting that you want to go to that type of PhD level in chart work. But I mean, those of you that are interested, I like those specific tools because they confirm what I'm seeing or not. All right, let's look at RGTI. And I need to go back to the weekend of this one. I've looked at this one recently. Nice trend. Mound 2 is done. Expansion. Now in this scenario, I'm going to measure the second mound for my fibs. Now, of course, you can measure the first one, but my experience suggests that it tends to give you a shallower view, but there still should be some symmetry. So your target to the 618 or 2618 on the larger time frame. We've already well overshot the 1618, got a nice rejection above there. So this clearly was an overshoot, clearly had buyer exhaustion here. 2 clean candles, 4 structure at the top. Now we took out at least a 78.6 as I measure it, just to give us a clean visual. So, looking at this structure here from internals, flew past, started gaining support between the 618 and the 78.6, but that is usually pretty much done at the 78.6 regardless, unless there's a catalyst going to drive the stock lower, because now that's outside the norm. It's an outlier kind of an event type thing. So I think it's got a pretty good shot here at getting back to 46 bucks right where we are. It's going to confirm the breakout. So this is where you would want at least structurally, how I have laid out my methodology, is that you would want a full position size on once that trend confirms that, hey, yeah, we're in an uptrend. So, roughly at about $30 is that time, but it's worth the shot. Where I would put my stop on this here is I would put it at this prior low, and I would just say, okay, if this break, then we're probably going to go down and we're going to test our lower shelf. Let me just give you a visual of what that would be for. So, this is your first shelf. So we should get some kind of buyers that show up right here. Then we're going to have another shelf that should fall in right below there. Nothing really, got a little bit of one here. Right here, maybe a little noisy, and some more buyers should show up there, and a lot more buyers will show up down here on this band right down here, which really is a sell side imbalance. It drifts back over to this point, so way the heck down here. That's where a lot more buyers will show up, simply because there's conviction on both sides, and that would be how I would look at the structure. But I think it's worth a shot right where we are, to be very candid, and that's my 2 cents. Any other questions, guys, gals? No problem, and I will make sure that Elliott Wave Absolute is in the EDU section for a link for you. No problem, folks. It was enjoyable. Great trading. Until next time.